Hey guys, Crypto here with a brief market update. This one's not going to be on YouTube. I'm just going to post it here on Twitter because it's kind of low time frame stuff that we're talking about, kind of spontaneous. I'll be making obviously a lot more YouTube content as I have been the last couple of weeks since I returned to YouTube, and so stay tuned for that stuff. But this is just going to be a very brief video to talk about Bitcoin with HBAR, some thoughts around the market right now at this particular point in time. So let's go ahead and we'll start with Bitcoin. When we're trading up here at about 67K, I was looking for a sweep of these highs and then a pull back down to the green levels here. You can see that that's exactly what we got. It took a little bit of time. We chopped around here for a lot longer than I think many would have expected, but nonetheless, we did get that flush down into the green zones that I've been talking about as well. So we've hit that local level, and as previously said that I think this is essentially like the first leg up. This is a corrective move, and then we're going to get another leg up to ideally the red zone, where I think is going to be kind of the last local high, the most logical place to expect a big rejection if we're going to get a flush back down to the lows. And so this red zone is kind of where you need to be cautious on not just Bitcoin, but pretty much whatever all you're in at the moment. So right now I'm trying to identify a potential bottom here in Bitcoin, maybe a potential long setup that may present itself. But right now we've hit my second downside target, which was the second green zone. I'm going to go ahead and remove the first one just to make this a little bit more clear. But we're still kind of chopping about, and it's certainly possible that we go for these lows and tap green again. I've highlighted the orange as a kind of like a last resort area for us to bounce before taking these lows. And for what it's worth, I do think that we are going to see, in my opinion, it makes the most sense at least to see higher than 67K before we go below the start of this leg up. So just to clean it up a little bit, you can see this leg started down here at 59.5. I do think that before we see that low again, we're going to get another leg up like this to match this one here. So that's why the orange comes into play, because if we do bleed down, this would be somewhere where I'd be interested in opening a potential long with a stop loss below this local low, because this is our local invalidation. Now, again, you think about what we have here, and if you consider that this low is our local invalidation, obviously once this low is lost, we take the lows of the higher time frame range and then potentially see a flush down to 58K-ish. If this is our local invalidation, then the closer that we get to this level, the more logical it makes to consider potentially a long if everything else lines up. If all the other data and metrics look good, then something like this would be a nice 3R long. Up to red is a nice 4R long. So a long from orange is ideal. Now, we don't always get that, and that's where you have to make the tough decision of, okay, do I attempt a more aggressive long with a lower risk reward ratio where I may only make a $1.4 for every dollar that I risk, or I may only make $2 for every dollar that I risk, as opposed to what is the ideal long down here. That's where watching the lower time frames kind of comes into play, because if you can identify a lower time frame invalidation level, again, our kind of mid time frame is this low, but if you can identify a pattern that forms here that gives you potentially an entry with a closer invalidation, in this case, you're looking for like a key low to be formed, a swing low into this demand, a sweep of these lows into demand, a higher low, and then a potential long. If you can identify something like that, then you may potentially be able to enter with a tighter stop loss and get a healthier risk to reward without having to wait for the orange zone that may never come, right? Because this is the ideal long zone, but there's a chance that we don't get that. So you're constantly looking, or at least I am when I'm trying to trade these things, for local potential longs or invalidations, considering that we may not get the ideal entry, right? And that's what I have here. I just have a key swing high and a key swing low marked off, and I'm looking for deviations above the highs and the lows. For longs, of course, you're looking for a deviation below the lows, some low time frame break in market structure to enter a long up to where I think we're headed ultimately, which is 67K plus for now. So that's my thoughts on Bitcoin here. We look to be bottoming. I'm just looking to see if we might form like a little bottoming formation here instead of an instant reversal. We've hit the area of demand. This remains an area of demand, so it's doing what it should be doing, which is acting as demand. Buyers are stepping in every time we tap it. That's why I'm looking for something to develop here for a long. Now, what does that imply for other coins, right? We have WIF that I'm in a short on, and we have HBAR that I'm in a long on, and we have Bitcoin looking potentially bottomed here. We're just potentially forming a base here or a higher low above this low here. So how does that play into the other positions that I'm in? Let's go ahead and talk a little bit about that. So obviously with WIF, let me see here. I have here's a chart. This kind of kind of explains what I'm expecting to see here on WIF, right? So ultimately, I'm looking for a move back below $1.89, which was our last low, realistically down below this low here. So I'm looking for around 150-ish. And this is kind of the way that I see this playing out. So time-wise, time is always flexible and time is always hard to predict. But if I had to bet, I would bet on us hitting this low probably around the second week of May, or like May 10th, give or take, some days. And this is kind of the way that I see this playing out. And the reason that I have this marked off, of course, I'm short from around 330-ish. The way that I have this marked off, and the reason why I have it marked this way, is because you have a local area of demand right here, okay? So the first bounce of the first test of around 260, you expect to see a bullish reaction, okay? Which is why I have us bouncing at that. Now, if we bounce from that and we fail to get back above these highs, then it's just a lower high. And then we come and test this again, and then the more that this area gets tested, the more likely it is to break through. And so what I think is probably going to happen is this area acts as support for a period of time, definitely on the initial test, and that could lead to another leg higher. But again, anytime we push up into this red zone, it's resistance. So even if we do make a marginal higher high above 350, which I don't necessarily think is like super likely, but even if we were to, it doesn't invalidate the setup here. We would have to get above 437 for me to start feeling uncomfortable and with, right? But this is likely to act as a first area of support. You can consider taking partial profits if you're in a short over here, because if we're going to bounce, it's going to be from the green zone. And if we're going to make a higher high and we're going to continue up, it's going to be from this green zone. So this is where you want to lock in potentially some gains. And I may or may not do that depending on how the market looks, how Bitcoin looks at the time. But essentially, I expect consolidation here with this area acting as support until ultimately we break down. This will probably coincide with a pullback on Bitcoin as well. Ideally, that's what I want to see. So how does this work with WIF? On the lower time frames, again, if BT is bottomed locally, then normally it means if Bitcoin's going to move up, the rest of the market moves up. And on WIF specifically, I can see the argument for a move back above these equal highs. And you can see that we're kind of holding support here. After this push up, I think that these lows are going to get run, which means these lows are probably going to get run, and these are going to get run, and that brings us to the green zone. But before that, I think we can probably push up to take these equal highs. This is about where my entry is too. So if we push back up to here, I'm back to break even. It's tempting for me to take profits here and then just reload here. It's very tempting, and I've been going back and forth about whether or not I want to do that, because again, with Bitcoin looking bottomed, and if Bitcoin rises, it's likely WIF sees a bounce as well, and most of the market does. And so those are the types of decisions that you need to think about, or that I think about, frequently. Do I take profits here? Because by the time we get back up here, I'm back to my entry. So if I lock in gains here, I can reload back at my original entry, and I've locked in some profit here. It's something that you have to consider, and you have to weigh the pros and cons, et cetera, et cetera. Now, because I have a long on H bar and another position that's biased to the upside, for me, it makes more sense to kind of maybe just let this ride, because even if we do ride up to my entry, that likely means the whole market is bouncing, in which case my long and H bar should be up in profit as well. So it's kind of a hedge. When I have one long and one short running, I can kind of be a little bit more flexible with my entries, exits, and stop losses based on that. But this is my thought on Doge. I think we could certainly push back up to 336. We can possibly push back up to 355 plus, back into our resistance region, but I don't necessarily think that's super likely at the moment. We'll have to wait and see. But ultimately, the biggest bounce on WIF I'd expect would be from the green zone here. So if and when we push down to 260-ish, that's where you're going to be looking for a bounce. Okay, if you're bullish, and if you're bearish, you're going to be being a little bit cautious about shorts in this green zone, because that's where we'd see possibly a nice bullish reaction off of WIF. Now let's go ahead and talk about H bar. So H bar is let's see here. I really need to clean up this list. I don't look at half of these anymore, but they're here from at some. I need to get more organized. So, okay, here's H bar. And my last chart on it was basically looking at the green zone, and I said if this holds, then we see continuation in an impulsive manner. And what I was looking at was it looked like we had a lower time frame impulse off of this level right here. Okay, we had a nice impulsive looking move here. Now, obviously, we've retraced that. So that idea, local limit idea, is invalidated. The same thing that I talked about in terms of ideal entries and stop losses and all that, that's the same thing that's being applied here to H bar as well. And so on H bar, you have to keep in mind that we had a pump from 8 cents up to 18 cents. That's over 100% move it was a matter of hours. So people looking at this and, I don't know. People, it's got to be like a intrinsic hate toward Hedera and H bar, because I've seen people pointing, oh, look at the massive drop, and it's like, dude, we're up 40% from where we were yesterday. Like it's context, right? Like, great, 40% drop after 100% pump means you're up 50%. Like, so if you're looking at this and making fun and mocking it, it's like, okay, we're still up 40%. But anyways, I feel like people who do that are just like, they just want to find a reason to hate a coin that they're not invested in or that they don't like. It's funny. But anyways, this was the idea. I thought we saw a lower time frame impulse, was looking for continuation. Now we didn't get that, right? We've invalidated that local impulse. So it doesn't change the fact I'm still looking for an impulse to the upside, and I'll explain why in a second. But it does mean that we're forming a base. We're still not ready yet to see that impulse to the upside. And the thing with this type of a position, now I'm long from about 12 cents, so I'm underwater by about a penny. But the thing that you have to keep in mind is that technical invalidation for this, you have to keep context in mind. Technical invalidation is a break below the origin of the impulse. We can go anywhere down to this level here, and this would still be a higher low. And in an uptrend, you get a higher low. What follows is a higher high. So we're targeting 18 cents for the higher high. If you're long here, someone mentioned that they're about to get liquidated. I don't know how you get liquidated, or you should not be in a position where you're getting liquidated before invalidation. Like, or you should not get liquidated, period. But my point is, if you're entering here and invalidation's down here, you should prepare for a scenario where we go lower, where we go close to that invalidation, because until we hit that, the idea is not invalidated. So you should be able to weather this type of drawdown, no problem. If you're entering at 12 cents, unless you have a lower time frame setup that you've taken, if you're entering like a swing position at 12 cents, you should be comfortable enduring drawdown all the way down to this level here, because that's still a valid setup and we could still reverse off of that level. So if you're in a position where you can't endure that type of drawdown, then that means that you haven't entered the right position. Like, either you're not managing risk, you're entering with a position size that's too large, or you haven't identified a proper trade setup, right? So that's just a little bit on H bar. Yeah, we've gone a little bit below my entry. Does it change my plan? No, we haven't hit invalidation. We're making a higher low. We need to be flexible in terms of downside when we have a setup, especially one that's based on key levels of invalidation, right? It would be silly for me to back out of a trade when invalidation's down here, and I very well know we could do something like this and ultimately hit my target. It'd be silly of me to back out because of some short-term drawdown. But what I will say is the reason that it doesn't bother me is because I've managed my position size to where I'm not down a lot with this type of a move. Some people have not done that. They've jumped in with everything or over-leveraged, and now they're squeamish because we're going down a bit against a position and they're in for way too much. So you really need to manage your risk at times like these, because it's a small difference between nailing this fantastic trade and catching what is going to be a 40% move to the upside versus getting prematurely stopped out because you went in too big. And that's kind of also why I wanted to make this video, because I wanted to emphasize what we have going on here with H bar and the basis for the entry for the long, the reason that I decided to long it. And people really need to understand that the idea of invalidation levels and that in these volatile markets, you're going to get volatility in the lower time frames, but it doesn't matter unless key levels are broken, right? Now, what do I see on H bar for the impulse to the upside in terms of like context, right? So I'll go down to the hourly here, and we have here off of this low. I think that this is the start of an impulsive move to the upside, but we have here off of this low a 1, 2, 3, 4, 5, like a little low time frame impulsive move, and so this, in my opinion, was the first impulse move of 5. Okay. Then we got a correction here. Then we got a very exaggerated and aggressive wave 3, which we can attribute to like the news event, right? Like as like a catalyst that causes volatility. But essentially, what we have here is like the third impulse, okay? And because it was such a volatile and aggressive impulse, such a strong one, the correction that followed was deep as well. But again, we know that wave 4s, as long as they don't enter wave 1 territory, perfectly normal, right? So as it stands, I understand that this was a deep pullback, but the pump that preceded it was unnaturally long too relative to the wave 1, and thus far we haven't retraced back into wave 1 territory. So this is still a valid count. And so all I'm looking for now is that fifth wave to the upside to take us to 20 cents, which again, as I've said recently, that 20 cent area is basically like a very high time frame area of resistance, right? So I'm going to zoom out a little bit here, and just to show you guys, that 20 cent area is a monthly area of resistance, and it's a likely place for us to pause or to take a breather or to like pull back, right? So that's this region right here. Very, very simple to see here on the monthly time frame, this consolidation before our massive breakdown. It's logical then that there's a lot of people, or not necessarily a lot of people, but there may be some that are underwater that may sell when they get back here, or there may be some people like us that want to take profits because we understand that there may be resistance in this region that we traded at for 3 months before breaking down from. So with that being said, you zoom back into the lower time frames and you can see here that we haven't tested that region, right? And we're missing a fifth leg. So all I'm looking for in this setup is I'm looking for a fifth leg to the upside to complete this lower time frame impulse, okay? And that should then also give us a nice push into resistance. We take profits here, and then we wait and watch to see what happens next, okay? From current levels, I mean, from my entry at 12 cents, that's a 50% move to the upside. That is a juicy, juicy move. And so for me, it was like a no-brainer to enter a position, and I can easily weather drawdown even back below the origin of this impulse. I can take drawdown all the way to zero. Like, it's not going to harm me because my position size is small relative based on the structure, right? Understanding myself that, okay, if I entered at 12 cents, we can see drawdown of 20% and still be okay. We can see drawdown of 25% and still be fine. And if we break down here, we see drawdown of 30 to 40%. And I have positioned myself in a way that that's fine with me. I can handle that based on my position size. What I like to do is I like to enter kind of a broad general swing position, like in a situation like this where I understand there may be some volatility. And then if I can isolate or identify a lower time frame structure, which is what I've been trying to do with the recent tweets, I've been trying to identify a lower time frame structure here. That would allow me to then compound the position. And you guys have seen this on my YouTube videos where I've shared about my compounding of trades. That would allow me to jump into a bigger position size with a tighter stop loss and kind of build on that position, that original position that I've started. So that's kind of my approach to things like this, which is why I don't really mind the drawdown. And just the only reason I'm showing a lower time frame PA here is because I'm trying to identify if we can identify a lower time frame setup. And I'm just sharing my thoughts on how I do that, which is why I keep tweeting about these lower time frames. But the big picture, guys, is that we have an impulsive move here. We have 3 legs. We're on the 4th, okay? Ideally, this ends, honestly, like where Bitcoin looks almost bottomed, right? So if Bitcoin bounces, the market does. I think we probably take these lows, and I'm looking for, again, a lower time frame setup here. Ideally, it's something like that, okay? The last one where we had the green zone and we had the slow time frame impulse, that didn't work out. So we go back to the drawing board and we wait for price action to develop and wait for something else to show itself. And so ideally we get something like this, and then we get that 5th wave impulse to the upside. Now realistically, this 4th wave shouldn't go into wave 1 territory, so we shouldn't see as low as 9 cents technically if this is valid, right? It doesn't mean we can't, just means for the setup to be valid, we shouldn't. And as long as we don't see below 9 cents, then we should be headed up to 18 cents next. That's kind of the simple breakdown. Now, if I go to the higher time frames to show you guys a little bit more context on the higher time frames, what we have here, and this looks really good on the 3-day, what we have here is the point of breakdown. I'm going to go ahead and clean this up real quick. The point of breakdown on H bar. Let's go ahead and hide all this just to clean it up. And we'll hide. I don't remember what this is for. We'll just delete those. Okay. So what we have here on H bar is what we call the point of breakdown, or the area where we broke down from. Okay. Which is typically acts as resistance. You can see we consolidated here from like March 1st to April 6th, March, April, about a month we consolidated here. Then we broke down, okay? We broke down, we hit clear area of demand that we tested last time, and we saw a very aggressive bounce to the upside. Now, this area that we'd expect to act as resistance, as you can see, we ripped through it. So what happens when we rip through an area that should be acting as resistance turns into technically support. And this is called, some may call this like a bullish breaker. Now, I know technically for a proper breaker setup, you're looking for a sweep of some lows, which we didn't quite get here because we kind of like we made essentially like a double bottom instead of sweeping these lows. And ideally you want to see a nice sweep of these lows for a proper bullish breaker setup. But I've seen them play out regardless, even in scenarios like this where we have a big wick to the downside that doesn't necessarily take, all. You can argue that it took some of these lows, close this inefficiency. You can make a lot of different arguments here, but a nice fat wick, nice sell-off, and then a reversal that immediately rips through that zone. That zone typically acts as support, okay? So now on the lower time frames, if I zoom back in, where are we? Well, we're sitting on that support, right? So I understand that we broke down this local low, But this is the wrong time to be getting bearish on H-bar when we haven't broken structure, we haven't broken the higher low that we put in here, we haven't broken the origin of the impulse, and we're sitting on what should be higher time frame support. Like, this is the most logical place to expect a reversal, right? So again, whenever you're doing these things, keep context in mind. Again, always look at the higher time frames to kind of form your bias or your basis, and then go on to the lower time frames to isolate entries, right? And keep structure in mind. That's the most important thing. This is a massive candle to the upside. What followed is a massive drop, but it's still half of what preceded it, right? Like, this is a deep correction, but the pump before it was double that. So this is healthy. And if you're making fun of this, I don't know why, but this is healthy. This is good. These types of moves that are so massive and that don't get a proper retracement are scary, because anytime that you make a massive move like this and you don't come back down to fill some of this inefficiency, you leave it for later, essentially, right? Like, if this move pumped and we just like simply consolidated here and then went up again into resistance, I can almost guarantee you that what would follow would be a flush all the way back down to this level anyways, and then we would continue up, right? The fact that we're getting this flush down to this zone out of the way now and we're covering up some of this, what you call inefficiency, all it means is that in the future, when we do go back up, we may not need to come back down this low, right? So if we had simply held our gains here and then pushed up to 20 cents, odds are more likely than not, and I would bet on this, that we come back down and we flush all of this back down to around 10 cents, okay? The fact that we've taken care of that now and gotten it out of the way doesn't necessarily mean it can't happen again once we hit resistance, because remember, this is a monthly region, right? It doesn't mean it can't happen again, but it does increase the odds that we do something like this, where we go up to put in that fifth wave, reject here, and then come back down for a higher low and maybe base out a little bit higher before going up again. Why? Because the inefficiency below has already been filled up or been cleaned up, right? And that's, if we had not done this right now, then my bet is we would have done something like that later anyways. So in a way, it's getting it out of the way now means that we may not need to revisit it again, and it just means the move up will now be more healthier, the chart will be more healthier on the way up, and it's better for us to do this now than to have avoided this, because anytime you get a massive move to the upside without a proper retracement, it's inefficient, as they call it, and you'll typically find a correction that fills that inefficiency or that void at some point in the future. So that's it for H-bar, guys. We've talked about Bitcoin, we've talked about WIF, we've talked about H-bar. Again, this was just a very spontaneous video. I'm not really going to edit it or anything. I'm just going to post it up. Just my thoughts on what I'm looking for here in the market. Again, I am bullish here. I do think that we're going to get another leg up. It just simply depends on whether Bitcoin bottoms where we're at now in our green zone, or maybe we bleed back to orange, at which point we have, very good odds for potential long. Either way, guys, I think the next major move, or I guess I should say midterm move, is a move up. Ideally to red. We want to get above these highs at 67K at the minimum, ideally to red. And then at that point, guys, as I've been saying now, based on the metrics, which are looking good, at that point, this is possible. Okay, we can break through, but my primary for now is still that we're going to get some sort of big leg down. And I'll also add, now that we're at it, if we reverse off of the green zone, we don't hit orange, what that means is that when we get that big move down that I'm talking about, that orange zone, because it's untested, may act as some level of support, okay? So we may bounce here, and people have asked, if we get that big leg down, does that mean a flush to 58K, 56 to 58K? Ideally it does. But you can't rule out something like this. You can't rule out something like this where Bitcoin holds a higher low just barely right into orange and then consolidates where everyone's looking for this, and instead we just consolidate and go back to the upside. Now again, this is going to be based on a lot of things. The data that I've shared with you guys on Velo, open interest, how much potential is there for liquidations, how does all that stuff look? And again, I just recently shared a video on YouTube, my last video that I just posted yesterday, which is a dashboard setup on Velo to match your Velo dashboard the same way that I have mine. Again, I'm talking about this dashboard here. I just shared a video on how to make yours look exactly like mine. And I also briefly talked about each of these indicators that I use and how to utilize them and what they mean. So definitely go check that out. But yeah, this is still kind of the main thesis. This flush, depending on if it makes a higher low or makes a lower low into 56 to 58K, will totally depend on how metrics look at the time. But this is essentially what I'm expecting, right? A rejection at red and then another leg down, and then it either makes a higher low or a slightly higher low, or a lower low, ideally, for a final flush before resumption of the uptrend to 100K plus. So that summarizes this video, guys. If you have any questions, as always, feel free to reach out, and I hope you guys enjoyed it. Please like and share. I appreciate all the support.